Everybody, and thank you very much for joining us. I hope this will be a really interesting discussion. I think, as we all know, we're about to see yet more change and upheaval in looking at stablecoin and digital currency. So before we think about the future, I thought it might make some sense to think about where we are before we branch out. And Marion, do you think you could help us just set out the landscape in terms of where we are right now?
Of course. So very nice to be there. Thank you very much for this question. So if we look at the long-term trends, I would say in 2017, one Bitcoin, it was $1,000. So it's much, much higher than what it used to be 7 years ago. And if we look at slightly more recently, in 2021, that year where Bitcoin skyrocketed, we had a lot of liquidity in the market, rates were low. We had some investors, traditional investors, but also on the retail sales and on the more institutional side, who were looking for higher yields. In 2022, the situation was very different. Inflation skyrocketed. So we had interest rates from central bank that has been raised. And prices went down. So very different atmosphere. And now, if we look at what happened in 2023 and earlier this year, prices are up again. And for different contexts, before it was more likely to macroeconomics, and this year it's more linked to the crypto asset space itself. Earlier this year in January, we had the approval of the Bitcoin ETF spot. We might have another Ethereum spot that is going to be discussed later this year. This week, we had the Bitcoin halving episode, which is taking place. And we are seeing before an halving episode, prices tend to rise, and afterwards as well. And we also have inflation slightly went down this year, so interest rates from various central banks may start decreasing this year. So all these conditions are helping in terms of Bitcoin prices and crypto asset prices. And the last one is regulation. MiCA is coming this year. In the US, it's moving slightly slower, but we are going to go back to that. So regulation is also there.
Thank you, that was really helpful. And Simone, do you think you could talk to me about your view on the market? What are we seeing in terms of the innovation and the adoption of these types of payment across the market?
Yeah, sure. So just a quick introduction. I'm Simone, CEO of Elliptic, where we focus on identifying illicit activity in crypto. And because of that, we're really focused on how crypto is being used. And I think, just following on from Marion's comments, a lot of what we're seeing in terms of developments is just the rise of stablecoins, and I know we're going to talk a lot about that today. And I think that's really exciting for all of us because it's really a diversification away from the speculative use case. There are true real-world applications for stablecoins, and that's why there's so much activity in that. I was in Paris at Paris Blockchain Week last week, and a lot of people talking about the stablecoin wars because a lot of players are coming into the space now. I think Circle and Coinbase together through USDC have really led on that, but we're also now seeing PayPal with PayUSD and other big players experimenting with stablecoins because they facilitate the opening up of the payments and the remittance use case, both in retail but also in wholesale. And I think that's where we're actually solving important problems, enabling payments to be taking place 24/7, 365. That's really important. Enabling payments to take place really quickly across borders, which in a high interest rate environment, people care about a lot more in terms of getting hold of their assets very quickly. So I think that experimentation, from my perspective, is one of the most exciting things that's happening in crypto at the moment.
Matt, do you have a view on that? Do you agree with Simone in terms of what she's seeing across the market?
Absolutely. I mean, stablecoins are one of the most, as you said, proven use cases already. I should say I work for Kraken, which is a big crypto asset exchange, US-based, but big presence both in the UK and globally, and a place where you can buy stablecoins, also a place where you can buy other types of crypto assets, including Bitcoin. We're certainly seeing an uptick in volumes in the UK and globally for a lot of the reasons that were articulated. There's a lot of excitement. Prices are up. That tends to drive users. But we fundamentally at Kraken want people to have access to crypto assets and be able to buy and sell them in a safe space, safe marketplace. Obviously, a big part of the story in the UK is how is regulation, and of course I'm a regulation and policy person, so I would bring it back to regulation, wouldn't I? But how is regulation going to create those conditions in the UK, sort of add more tailwinds to that consumer demand, add more appetite for that experimentation, I think that you rightly just pointed to. And you know, a big part of that is how is regulation going to interact with education efforts. A big part of the crypto journey is telling people what crypto's about, telling people what specific tokens are about, explaining prospective and current use cases. And I think the Bitcoin halving is a very interesting example right now. We're excited about it at Kraken. We've produced some material around it. You're all welcome to go check it out afterwards. But importantly, that now has that material that we put out there that explains that, what it means and what it might mean for Bitcoin, now has to be regulatorily compliant in different jurisdictions, has to tell a story in maybe slightly different ways in different places. It's not a bad thing. I think that's a good thing. But we do have to be really mindful of the fact that as crypto players, as venues where ordinary citizens, ordinary people are going to buy and sell crypto, we have to be really mindful of the fact that regulation's coming. It's going to change how we talk to people. And I think going to create sort of, as I said, those tailwinds, that certainty that the information that people are getting is the right kind of information. The UK is well on the way with this journey. It's got marketing rules already. The minister, I think on this stage, made comments yesterday about plans for more certainty through legislation before the summer. That's fantastic. And we'll look forward to keep working with policymakers here on that framework.
Thank you, that was really helpful. And Tom, can I come to you and ask whether you think the role of regulation is moving in the right way? Are you getting the right platform for your business to allow innovation?
Yeah, look, I think so, and I just echo what Matt was just saying. To have the minister here kind of echoing what was said 2 years ago about making the UK a crypto hub, and now talking about bringing in kind of regulation for stablecoins and for staking by June, absolutely shows that we have top-down kind of government support, which is great. And the regulators are doing a huge amount of work, and they're engaging both the Bank of England and the FCA really intently with us in the sector. So I think we're really pleased with that. I mean, I'll talk a little bit about stablecoins and stablecoin regulation. We are so excited about stablecoins. We think this could be the breakout use case for kind of crypto. We need to talk about it more. Stablecoins are here and they work, right? I think that's the key thing. Brevin Howard did a study on stablecoin usage. In 2022, Visa did about 11.6 trillion of transactions. Stablecoins did 11 trillion. So they're almost exactly the same. Clearly, there are different use cases here, but they kind of work. And I think, as also mentioned, we've got PayPal using them, Visa is using them, a lot of banks are using them. And at Coinbase, we've got our own blockchain, which is called Base, which is a layer 2 that sits above Ethereum. Now, effectively, I genuinely can send money like a text message. So if somebody's in Australia, in Canberra, even if I've just got their mobile number, I can send them a link and I can send them a digital dollar, USD coin as we call it. I can just send it and it just opens up on their WhatsApp or whatever, and they click a button and a self-custodial wallet will appear and the money will be there. So stablecoins exist and they really work. That promise of being able to send money like a text message or like an email, that now exists, right? And we can dramatically reduce fees. If you read the Bank of International Settlements and everyone, the problem we've got is not domestic payments necessarily, but cross-border payments. So with programmability and cross-border payments and leveraging this technology for peer-to-peer, I do think there's going to be a real transformation, revolution in payments. So we're really excited about that. The regulators get it, so I'll come back to regulation. I think they understand that, they see the promise. We've just got to make sure that we kind of calibrate it right. And there are a few things that maybe we can pick up in a subsequent round, but things around the capital requirements for stablecoins, I'm not sure yet we're calibrating them right. We want a level playing field or even better treatment versus e-money and deposits. Inherently, a stablecoin, I would argue, is less risky than a deposit, right? And we can discuss that on the panel. The custody requirements, I think we need to kind of look at potentially as well. And then also the cliff edge or the consistency between the FCA regime for small stablecoins and then the Bank of England regime for systemic stablecoins. So I think those are a few of the areas we would look at, but we're really pleased to see the engagement from the regulators and the support from the government.
Simone, I can see you nodding vociferously. Do you want to respond?
Yeah, well, I think Tom raised some really important points, and he touched on programmability. And from my perspective at Elliptic, that's something that's really interesting about stablecoins, because the way the smart contracts are constructed means that when we see illicit activity taking place through stablecoins, it can actually be stopped, blocked, and reversed. And that's something that's different from truly decentralized assets. And so I think that needs to be an important part of the narrative, particularly with the regulators, in terms of one of the key benefits as we see it when it comes to stablecoin usage. Now, of course, there's also the other side of that coin, which is that stablecoins are, by their very nature, less volatile than something like Bitcoin or Ethereum. So they become quite attractive to criminals, because it means you can move your funds across different chains very easily without exposing them to that volatility. But I think the inherent blocking nature in the smart contract of stablecoins is another really important benefit that sometimes gets overlooked.
And I think that's a really important point that we should probably dwell on a little bit longer. And Matt, I wonder if you want to pick this one up. Clearly, there's a bit of work here still to do in terms of trust, confidence, for particularly if we're talking about these as consumer adoption for payments in the future. And obviously, there's a huge amount of focus on fraud and illicit activity. And what are your thoughts about how the industry should be talking about this, and how do we tackle this together?
Well, I already picked up on, so I won't dwell on the regulatory piece that I think really does add confidence and sort of create the space for firms, crypto players, to tell their story in sort of a regulated and compliant way. I think there is an industry angle to this as well. Fraud is serious. Fraud is real. There are absolutely opportunities in the crypto space for bad actors to leverage the technology, like any technology. I mean, I think we also need to be careful not to pick on crypto too much here and suggest that crypto is a unique nexus for fraudsters and a unique nexus for whether it's authorized push payment scams or other forms of social engineering that result in fraudulent outcomes and bad outcomes for ordinary people. But I do think there is, particularly while we're still in a phase where, frankly, most people have current accounts with banks, and if they want to play in the crypto space, they need to find a way to move their money from their banks into crypto platforms like Coinbase, like Kraken. We need to work very closely with the banks in particular on moving forward, cracking this nut, so to speak, and making sure that players that take fraud seriously have real controls, take real steps to protect their consumers, are seen as such by the banking community, and frankly seen as in sort of through a privilege lens by the banking community, and that's recognized. There are good actors and bad actors in this space, and there are firms that take fraud more or less seriously, and we need to make sure that gets recognized in how the banking sector treats crypto firms. And I think we need to do that first before we turn into a broader policy conversation around it.
And Tom, I think you wanted to jump in.
Yeah, I was just going to double click on that. I think we sometimes forget that regulated crypto players, we do exactly the same KYC and AML checks as banks. Exactly the same, there is no difference. And then at the risk of being an advert for blockchain analytics, which Marion, you would do much better, I think we're able to do more, right? Because the blockchain is immediate and it's immutable and it's transparent, unlike a bank that can just see where a customer sent their funds to, just one step or one step to them. Using blockchain analytics, we've got extraordinarily powerful tools now to see the entire ecosystem, so not just one step, but multiple steps away. So we can actually leverage these analytics and look at know your transaction as well as know your customer. And some of these things are superior than what we see in traditional finance. So I just think it's about explaining the new technology, because there are problems that we have to address, and we have to be humble about fraud, but I think we've got some powerful new tools to help us.
I think that's a really interesting perspective. And Marion, just quickly to talk about a more global angle, do you think there's any particular learnings that we're seeing globally that the UK should be adopting in this space?
Sorry, could you repeat?
Oh, so I was just wondering whether you've got anything to add from a global perspective. Is there anything the UK should be learning from other jurisdictions?
Yeah, that's a great question. And actually, so if I go back to the CBDC point that we used to mention, there is quite a lot actually that advanced economies can learn from emerging economies. And if you look at CBDC, central bank digital currencies, in general, emerging economies are leading the race. It's already live in few jurisdictions like the Bahamas, Eastern Caribbean, Nigeria, China. It's officially in pilot, but it's very well advanced for a pilot. And there are a lot that advanced economies can learn from emerging economies. So that's for CBDC, but in terms of payment as well, digitization. For example, India is also very, very well advanced in terms of digital ID, digital payment, Aadhaar, what they have been doing recently. Africa, Grameen Bank, and in terms of payment, Kenya and M-Pesa as well, definitely. And on CBDC, emerging economies tend to lead the race. Advanced economies are slightly behind. I'm thinking about the US, the digital euro, the Eurozone, and the UK as well. We are slightly behind, and we haven't decided yet if we will have a CBDC or not.
And Simone, just to turn to you quickly, is there anything else that you're seeing globally that you think we could be doing better in the UK?
I think it's just important that we don't lose sight of the kind of global nature of this industry. I think Marion, pointed to some of that there. About 5% of the remittance corridor between the US and Mexico is facilitated through crypto today. And we're really early. And so I think if we think about that in the bigger context, it's just clear to me that it's something we shouldn't be ignoring. And so while it's great to hear that the UK government is going to put a big focus on trying to get legislation out by June, bringing that forward from, I think we were anticipating that to be towards the end of this year, that is obviously really welcome, but we are behind our European cousins for sure, and so keeping up that momentum and that focus is really important. Again, being in Paris last week, and also if I look to places like Dubai and Abu Dhabi, there are very progressive regulatory regimes there where stablecoin issuers and payment companies in particular are really looking at those jurisdictions as being very ripe for building their businesses.
And Matt, what do you think? Do you think that's the case, that we're playing catch up?
I might sound a bullish note for, let's call it crypto PLC. I'm, in addition to working for Kraken, chair of a group called the UK Crypto Business Council. And I think sometimes there's this sense that the UK has an ambition to become a crypto hub, and that the regulatory framework is coming, and that will provide certainty, and then there will be investment. It's already here. The industry is already here. Kraken employs 300 people in this country. And we already face a significant amount of UK regulations. It's true that spot markets where you buy and sell Bitcoin are not specifically regulated yet, but there is stuff that, trust me, we deal with the FCA a lot already, even waiting for the regulations. We employ people here, we have compliance teams here, and we're not alone. And I think it's really important not to lose sight of the fact that we've already got a pretty vibrant crypto industry here. And it's really just about doubling down on that. And actually and being excited about what's to come, but not losing sight of the fact that we're already a crypto hub by most measures. We can do more.
And Tom, have you got any final thoughts on that point?
Yeah, look, I agree with all that. I think there's a terrific opportunity for the UK, real terrific opportunity for the UK. I think they've got to seize it. I think now is the time. I think the government support is really welcome. I think, stable coins particularly, we could see real kind of fast kind of adoption and a big use case. So the vision that kind of the government has, I think the Bank of England has about a mixed payments ecosystem, is one that we want to see reflected in regulation. And we think we're on a really good track for that. So whether it's a tokenized deposit, a CBDC, or a stable coin, let's create the circumstances that we kind of mitigate the risk, but we kind of create an environment in which they can really flourish. I think having competition in payments and solving some of these problems around remittances and cross-border, getting merchants to be able to receive money in seconds, not days, reducing transaction fees. I mean, I think there's a big prize here. And I think the UK, with its kind of, TradFi ecosystem, with this kind of embrace of fintech, I think can be a real leader in the space. So we're really excited to be here and excited for the opportunity.
Thank you so much, everybody. I think we've run out of time. So thank you, everybody.
Thank you so much.